Good morning and welcome to a holiday shortened trading week here in the United States. I'm Keith Fitz-Gerald. Thank you as always for joining me with the 5 with Fitz. You know, the markets seem to be rebounding a little this morning as we enter a holiday shortened week that I've just told you about, Thanksgiving, at least in the early going as I record this anyway. Now, to be fair, I will not hold my breath even though I'd like to and encourage you not to either. You see, holiday shortened weeks rarely trade like you'd think they would because Wall Street's just like the rest of us. And that means many Wall Streeters work light, as I call it, as we head into the Thanksgiving holiday here in America. Now, that in turn can produce lower volumes, wider spreads, which are the difference between what a buyer offers and what a seller wants for his or her stock. And yep, more volatility because the money and its computers often step back while the weak money keeps guessing. Now, that sounds a lot scarier than it is. So, the real challenge and the opportunity, because those things go hand in hand, isn't that Wall Street is going on holiday, but all the guessing that the weak money is still going to do. So, way around that, don't guess. The markets reward discipline and knowledge, and they always have, especially around the holidays. That's why I suggest you take a page from my playbook instead. Number 1, step back. Number 2, take a deep breath. And number 3, set a few low ball orders for stocks you want to buy ahead of time. Then go enjoy the holiday with your family, friends, and loved ones. And if you get hit, great. It's going to be awesome because you're going to get the stocks you want to buy anyway. And if you're outside the United States, same move. Holiday-driven trading dynamics are now global given how interlinked the world's financial markets are these days. And that means that there's plenty of opportunity, particularly if you're using high probability tactics like simple low ball orders to buy the stocks you want, or selling cash secured puts that can help you capitalize on the chaos and turn panic into profits. I love that part. As always, be in to win or you won't win. All right, here's my playbook today. I'm very excited. I mean, can you tell? I love holiday shortened weeks because you always find great opportunity. Number 1, the most important stock I'm watching this week, and yes, a Santa rally is still on the table. So I was honored to join the venerable Stuart Varning this morning, again ahead of the opening bell. Stuart asked me what wild cards are on my radar this week about the stocks I'm watching, and of course, what could move markets. Now, you can watch that video elsewhere on my channel. We even carved out a minute for Microsoft and why, despite all the noise, I still think a year-end Santa rally is very much in the cards. So Keith's investing tip in this department, investing this time of year, around holidays particularly, typically comes down to 2 things. The scared money constantly looks for a lump of coal, but real investors, like us, like you, like me, we, because I'm one too, look for catalysts. So the question you want to ask yourself this morning as you're watching this, if you're listening to my voice driving along, is which one are you? My guess is it's the latter. You're an investor because you're here and we're making headway together while others cower in fear. Number 2, Eli Lilly in for the win and a split. Oh boy, I like this one. Eli Lilly just became the first healthcare stock to hit $1 trillion in cap. Novo Nordisk, meanwhile, has gotten shellacked. Now, I've talked about this in the past and this company in the past and why I thought Eli Lilly was the better play versus Novo Nordisk. And you can look that up in the written version of the 5 with Fitz and click on it to your heart's desire. CNBC is reporting that the pharmaceutical giant stock has been riding along skyrocketing demand for its weight loss injections, Zepbound and diabetes-treating Mounjaro, and the drugs that have driven massive sales growth for Eli Lilly and the demand for treatments and those offered by its rival Novo Nordisk will only rise in the coming years. Now, I agree with that assessment, but again, think Eli Lilly is the better play here. What's more, at roughly $10.60 a share, $1,060 a share, I think Eli Lilly could be an interesting pre-split buy. Now, the rumor mill is certainly in overdrive, so that matches up, considering that the last split was in 1997. I'm thinking 4-to-1 or 5-to-1 split could be inevitable come Q1 earnings. So that's what you want to think about. All right, trade idea if you want to play along, deep in the money, calls or leaps, meaning long-term equity anticipation securities. Both would ensure you potentially enough time and upside if you're of like mind. Heck, even just the stock, if you want to keep things simple, is in go buy just the stock. Stupid simple often works best. All right, number 3 today. Tesla, as I begin to record this, is up 6.37% today. All right, you know the drill here, or at least the direction anyway. Uncle Elon has stepped up with more aggressive AI production, something the One Bar Ahead family has known about for some time now. And the game is about to get a whole lot spicier, in my humble opinion. Why and what's different? Well, Musk himself made recent remarks highlighting Tesla's in-house AI hardware development, stating that, this is the best part, the company aims to produce more AI chips than all competitors combined and plans to release entirely new chip designs on an annual basis. That is a monster statement, folks. He also announced a major hiring drive for elite chip designers, with Musk personally leading design meetings. Think about that one for a second. To accelerate innovation for applications in vehicles, robots, and data centers. This reminds me of Steve Jobs all over again. And these remarks position Tesla not just as an automaker, but definitively as a formidable player, challenging giants like NVIDIA in the AI infrastructure race, fueling investor excitement about potential revenue streams far beyond electric vehicles, which we've been talking about here in a One Bar Ahead for years as a possibility and a probability. Now we're upon it. I'll have more, of course, in today's One Bar Ahead update, along with a subtle strategy shift that you will want to pay attention to. So if you're an OBAer, keep an eye on your email later today, and please consider an open invitation to become an OBAer if you're not. I'll be here if you'd like to learn more. Number 4 today, Defense 2.0, NATO's first air-gapped sovereign cloud defense system. All right. NATO just signed a multi-million-dollar deal for an air-gapped sovereign cloud system. Now, the headlines focus on Google Cloud, but the real takeaway is much bigger. Defense has officially entered the AI era. NATO didn't buy cloud services. It bought digital sovereignty, meaning the ability to run AI models, simulations, and classified analytics entirely inside its own digital walls, disconnected from the public internet and insulated from geopolitical shock. Now, that is why the world's most critical computer systems are air-gapped, meaning physically isolated, sealed off, and untouchable by outside networks. No public internet, no cloud dependency, no foreign choke points. Air gapping is the ultimate insurance policy because it means when the world melts down, your data doesn't, or at least it's less likely to. Now, I think we're going to see entirely new AI-driven industries and computer hardware around air gapping in the next year or two, particularly as quantum computing emerges. Now, cybersecurity, to my way of thinking, remains one of the single most important investing themes of our lifetime. And I hope you've got a handle on it, because in your own portfolio, you're going to need it. The OBA family has this covered, but if you don't, I would encourage you to rethink that premise. All right, Keith's investing tip in this department. Contrary to what most investors believe, the global race isn't about who builds the smartest model. It's about who controls the environment those models run in. And that's where the long-term leverage is and the profits will be. So, bottom line, invest accordingly or you will be left behind. And finally, something that's been on my mind a little while, but this morning's headlines reinforce that. Number 5, what happens to defense stocks if there's peace in Ukraine? Now, there's a lot of scuttlebutt about the possibility of a peace deal in Ukraine. So, what happens to defense stocks if that happens? My POV is the defense names will likely take an initial hit. Headlines always spook the weak money. But here's the part most investors are going to miss again. Beijing will likely use any peace deal as an opportunity to view Taiwan through an entirely new lens. Washington knows this. That's why I believe spending won't shrink, but will actually expand and accelerate. Peace in one theater usually frees up capital, attention, and urgency in another, especially when China, which is arguably the only other nation state on the planet right now capable of power projection, starts to rethink the game. So Keith's investing tip in this department is straightforward. Geopolitics never takes a holiday. The money just changes coordinates. All right, today's bottom line, Volatility is obviously tough to stomach and it's scary, and you're not alone if you think so. But the sooner you recognize volatility as a traveling companion rather than something to fear, the sooner, the more, and the greater the opportunities you'll see. Profit potential is always funny that way. Anyway, on that note, as always, let's make it a great day and start the week strong. You got this, I promise, and I'm with you every step of the way. Let's make it a good one, and I'll see you tomorrow. Thanks for watching. Cheers.